All right. Well, good morning, everyone. It's Thomas Montgomery. We are together today on Thursday, February 19th, 2026. We get together most weekdays, Monday through Fridays at 8 o'clock to talk about the grant, to talk about how we assist legally and ethically small businesses in getting funding through a legal, compliant, ethical, and guaranteed model called the SPE. On the left-hand side of the shared screen, which may be a little bit busy, but it is our website, spefunding.com. If you're looking to better understand how this model works, this is the place to go. On SPE Funding, you'll get a brief introduction, access to our daily Zooms, which we're recording right now, and a three-step process. There is one training video on step one to give you a baseline understanding. So again, what we do is legal, it's ethical, but it's advanced. These are advanced strategies, advanced topics, and so it's important before anyone decide to participate that they understand how it works. I don't think we're going to be able to convey that understanding through a brief conversation. Very often we'll have people that call in and say, just, no, 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 I don't want to go to your website. Just in 1 minute, tell me how it works. It's like, well, how does brain surgery work in 1 minute? There's more complexity. We never, ever, ever again want to have a client come back and say, "Oh, you didn't tell me that. I didn't know that." So we have them go through step one. If it makes sense, then they go on to step two to get a really deep and thorough understanding of the model because it's probably not something that they're familiar with. Once we get to step three, they're ready to go. There's no upfront cost, guaranteed results, and they're able to click right here on the click here. It'll pop up, it'll give them an overview, and then the ability to enroll right underneath, which is a one-page app. Top half is business information, which is optional, bottom half is business owner. So that's the SPE website. Today, we're going to focus over here on the right-hand side, and really our topic is to talk about co-signers. That's a term that I think some people are familiar with, but they may have incomplete knowledge. So one of the benefits of participants using the SPE program is we will provide them a cosigner, and it's free. It's built in. But let's go ahead and go through what that actually means and how that works, and of course, answer your questions. If you are one of our affiliates, one of our distribution partners, or well, if you want to become an affiliate, it's down here. But the point is, as an affiliate, you probably will run into people that have imperfect credit. So they're used to hearing no. They're used to being declined, or they don't even try because they know their credit isn't very strong or they perceive not strong enough. That won't be a barrier in the SPE model because we provide, if needed, a credit cosigner. And that's what we're going to talk about now. This is a big deal. So to some of you, you take Amanda, you take Diamond, you take Gilbert, Jeff, Joe. A lot of you have really high credit scores. You could be one of the co-signers for other clients because you're so strong. But there's a lot of people out there that's not as strong as each of you credit wise, and that has kind of locked them out of financing and funding. That's no longer the case. But let's dig in. So with this flyer, we certainly wanted to reiterate what is a SPE in case they're seeing this flyer and not the website. So let's take it from the top. A special purpose entity. Now, sometimes those are called special purpose vehicles. SPV means the same. But an SPE is a legal entity created for a specific purpose. It's designed to isolate financial risk, manage assets. It's essentially an entity designed to go get capital. And in many cases, clients will use the SPE to get the client to get the capital raised and then transfer the capital that's raised to another entity for operational use. In our model, we set up SPEs as management consulting firms. So let's talk about that for a moment. So every business has to be some type of business, and that starts with its industry code. Are we an adult entertainment venue? Are we a private security firm? Are we a public university? every business has to fall into some sort of parameter based upon their industry code. So that is a conscious decision that we need to make early on. What is our industry code? Not to say that some industries aren't fundable, certainly some are high risk, but beyond that, the industry that we're in is going to determine how we access capital and how we should structure it. And that is, in fact, part of this training here, the very last training under number two. So we set these up as management consulting firms. If we have a client that comes to us and they say, no, 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 I don't want it to be structured as a management consulting firm, that's fine. Then that's a custom build. Here, we're putting everything together and it's ready to go to funding. But if someone wants to do a custom build, we can, and we can change the industry. But we set them up as management consulting firms. The model makes sense. And if you go through this training, you'll understand it. So when we set up the SPEs, there's no out-of-pocket cost. Everything comes out of the financing. So what do we know? We know that we're going to be able to get each SPE a minimum of 250,000. We guarantee it. It's promised, it's committed, it's in writing. Now, if a client needs more than 250,000, we've got a little bit of an issue. We either need to go back and change the industry code or we need to repeat the process multiple times. Either way is fine. But each SPE is set for specific 250,000. Is this a free program? No, it's not a free program. It's not a free program. And in fact, when people come over here and click this link and pop it up, it's going to show it is not, let me move down, it is not a free program, but there's no out of pocket. So essentially, if you do the math, the client's going to get at least a $250,000 loan, which is stated here and stated over there, of which they're going to pay us 25,000. And then they're going to net keep 225,000. That's the economic model. So if someone says, no, that's not a good deal, I'm not willing to pay 25,000 after funding to get 250, they shouldn't do it. But that's the model, that's the proposition. But it gets a little bit better than that because on top of the guaranteed loan financing funding, we also will be able to transfer over contracted clients, which is also referenced here. Oops, go up a little bit. Referenced here in first month income. So we transfer over 25 contracted clients who each owe 10,000 to the SPE. So really the client's getting 500,000. They're getting 250,000 in funding guaranteed. They're getting 250,000 of first month income guaranteed. This is really what makes the SPE different. Many of you are very sharp, but it's the second part that's a really important issue. We've had so many people through the years come to us and they want funding, but they don't qualify. Well, we need to qualify for funding, and what it often comes down to is the three C's. So let's talk about that now. So, if we're going to pursue business funding, we need to have a fundable business, and that's commonly the criteria for such is commonly referred to as the three C's. So, the three C's include collateral, capacity, and credit. So that's what makes the SPE so valuable is it's a pre-established structure ready to go to funding where it removes the burden from the client of needing to bring those credibility elements themselves. Because a lot of people, they're not like you and I, they don't have enough credibility, so they wouldn't be successful, or at least right away. So we provide the collateral, we provide the capacity, which we've talked about a moment ago. But today's topic is how do we address the credit? Oh, are we going to do credit repair, or are we going to take people that haven't paid their bills and make them look like they have on paper so they get funded? No, that's a slippery slope. That is a gray area that we're not going to be involved with. So if we have a client that their credit is not strong enough to follow through on the model, then we will provide a cosigner, which we'll talk more in depth about. But with credit, it's important to understand there's actually two elements of credit. There's business credit, that's reflected as the trade lines under the business with payment experiences that generates like the Dun and Bradstreet Paydex score. So that's already built in. But what we're talking about today is on the individual side, if the business owner is not credible enough based on their business credit, we will provide a cosigner. And that's a big deal. Now, a lot of you understand, you could go get your mother, your brother, a friend, a mistress, someone to serve as your cosigner. So it's not like we have a lock on the only way that someone can get a cosigner is through us. That's not the case at all. But we've had in the past clients that came to us, they didn't lack the credibility from their personal credit. They didn't have anyone that trusted them enough to be their co-signer, and they got stuck. So in the SPE model, the concept, the design is to not allow anyone to get stuck. Everyone's going to get the funding plus the income. All right, so what is a co-signer? What does that mean? A cosigner is someone who agrees to take over the payments on a loan if you can't. They typically have strong credit or assets, and it's someone that you trust. Cosigners add another layer of security for the lender. So I know. You and I, we're of the mindset of being customer advocates. Who cares about the lender? We just care about the customer, the client, the grant participant. However, we're trying to get money from the banks, from the lenders, so we kind of have to care about what they care about too, or we're not going to be successful. So if the applicant themselves, even though we have a shelf corp, we have the SPE, we have a business, some lenders, not all, but some lenders, some loan types look at the credibility of the business owner. And if that's the case, we need to have a credible business owner or bring in a cosigner. Here we're describing how we can bring in a cosigner. So that is specifically what we're talking about. So could they bring their own cosigner in? Sure. Do we charge for the cosigner? No. But the goal is, especially for those of you that are affiliates, we want everyone to be successful. We want 100% success with the SPE program. The only way we can accomplish that is making sure that we address the three C's. And this third C we can address with the cosigner. The capacity we address with the income that we push into the business and the collateral as well. Okay, so let's get back down. So we have right now, there's 6 or 7 of us that have agreed to serve as co-signers, and we're looking for more, but we can co-sign on multiple deals, so we're not restricted to just one deal. So if any of you are interested in also serving as a co-signer for other businesses, let us know and we can add you to the list, and we'll talk about the minimum requirements in a moment. But a couple of you have already approached us about wanting to do that. I just pushed you off until today's discussion. So when it comes to a cosigner, what makes a good cosigner? Some people don't understand this. So it's more than just a credit score. A lot of people that are a little more simpletons than you and I, they think it's all about credit score. It's just that 3 digits. If I've got a high credit score, then I'm very fundable and I can get funding and I can help other people get funding. That's not true. That's not true. There's more than the credit score, although that's an important summary statistic. It's also the credit profile. So I will share with you what our cosigners bring to the table. And for those of you that have expressed interest, like Mr. Stockton, like KE, I believe, Kenny, a number of you have offered or inquired about being cosigners for others. We're going to go through the checklist now. So, what are the requirements to be one of the cosigners for our program? Here we go. Well, we know that a strong cosigner has good W-2 income. And that W-2 income that we're looking for is real, not made up, of at least 250,000 a year. And we want that cosigner to be able to show continuous W-2 employment at that same business, same employer, I should say, for 3 years. So from an income perspective, and you might say, well, what does that have to do with credit, right? How much money you make doesn't determine your credit score. How long you've worked, your stability doesn't change your credit score. That's correct. But it has tremendous impact on your credit profile. So I should say, we're not just providing cosigners that have a good credit score. We had a client this week, high credit scores, high 700s. Now, he wasn't coming in to be a cosigner, he wanted funding for himself. High credit scores himself, above 750 on all three bureaus. Guess how much financing he qualified for? Zero. Zero. Because his credit profile was not good, not good enough. So we start with making sure that the cosigners that we're going to assign to the SPE clients come with good income stability. So that's number one. So again, for those of you that asked Mr. Moses and Rod and others that said you might want to be a cosigner for others, this is the first criteria. The second, of course, is looking at the credit score. We want to make sure that our cosigners bring at least a 720 FICO across all three bureaus, and that's not too difficult. That's around the average credit score in the United States. We want to make sure that they have less than 25% revolving utilization. Now, you might say, well, isn't that kind of required to have a high credit score? No, no, you could have a higher utilization and still have a high credit score, but these are the elements we're looking for. These are the elements that we provide. And again, if you're looking to help others, like Todd has asked about and Willie, then just make sure you meet these criteria. With the credit profile, let's dig into what we provide, what we're looking for, and then again, if you're wanting to be one of the co-signers, just to have a little checklist. We want to make sure that the credit profile is strong, and we want to make sure there's at least one trade line, one term, not revolving, not talking about a credit card, but a term loan of at least 150,000. Because size of trade lines on the personal, well, size of trade lines matter on both personal and business, but we're talking about personal. So we want to make sure that the cosigner brings at least one trade line of 150,000. We want to make sure they have an active open real estate trade line of at least 250,000 that's at least aged 3 years. And then we want to make sure they have at least five revolving, like credit cards, open and current revolving trade lines. And we need at least one of those to have at least a credit limit of 20,000. So this is how we describe what a really strong cosigner looks like. I see Sanya has a question. So you could bring your own cosigner and they wouldn't have to have this level of rigor. So we're not saying this is the minimum credibility that any cosigner should have. That's not what I'm saying. What I'm saying is for the cosigners that we provide for free through the SPE program, this is the minimum of what we provide. Who has questions on those credibility factors? We've got 638 of you on. Anyone have questions? Kenneth, Mike, Mr. Stockton, anyone have questions? So, yes, again, for those of you that are interested in being a cosigner to help others, if you meet this criteria, fine. If you are a client, a participant, you don't meet this criteria yourself, if we need a cosigner, yes, we can provide you a cosigner, and there's no cost for that. And what I'm explaining to you is the cosigners that we bring are pretty damn strong. But I know you all are, most of you all are as well. So, Corinthian, any questions on that? Aziz, any questions? Okay, if you have those, type them in. So the bottom line is, how do we get a cosigner if we need one? Real simple. So the first thing that they're going to do is, of course, come to spefunding.com. This is where we always start. They're going to go through the 3 steps, which we've discussed. They're going to go ahead and enroll, which I've shared with you. It's over here. I didn't mean to zoom it. So it starts the same way. And then as they're going through the process, if they need a co-signer for the $250,000 business loan, then we will provide a co-signer. Who has questions, comments on that? And based upon the feedback, I think a few of you really see how incredibly relevant this is. But it's consistent with the whole model. When you just if you're an affiliate, when you describe this to people, it's too good to pass up. It's not too good to be true because it is true, but it's too good to pass up. We're providing all the credibility elements legally and ethically to help someone get funding, right? Because what does it take to get funding? We need to have a fundable business. And we talk about the three C's, and we've been talking about the three C's together for years. But not everybody's like you and I. Not everyone has the three C's. Therefore, if they don't have the three C's, we need to have a resolution to fix that to make sure they get that 250,000 capital raise and that they get that 250,000 of first month income. That's the way the models develop. So once you understand that, I think you'll be like I am. This is the best thing since sliced bread. This has the ability to be a massive, what they call disruptor in the small business marketplace. That's why we have so many of you opening local offices. We've got Diamond here online, her and her partner. They're opening 8 offices. So it's not uncommon. Once you see it, once you get it, you understand it, it's powerful. If it doesn't quite make sense to you yet, that's okay. I would say slow down and probably come back and watch the training again. I'm not trying to brainwash you. I just need you to understand the key principles of what it takes to get funding and then how we've built those concepts, those principles, those credibility elements into the SPE program. Once you get that, it's like, damn, this is great. We can help lots of people. All right. Thuk asked, does a cosigner slow the process? Well, I guess let's say by a couple days. And I answer that way because, first we would try to get the funding with the normal grant participant, the client. And if we run into a problem, then we would recommend and offer a cosigner. So yeah, I mean, it would add a couple days to the process, but nothing significant. Again, I think when you understand that we're solving the problems, that's what entrepreneurs do. I talk to Amanda frequently and Mr. Ryans and Mr. Barchi, and that's what entrepreneurs do. We solve people's problems. And the problem that this model solves is we're helping people legally and ethically get funding. No, we're not going to take someone with challenged or bad credit and somehow masquerade their bad credit so the lender is coerced into loaning them money where they might not have otherwise. That's a little gray. We're not going to do that. Instead, if they're not strong enough, we're going to bring in a cosigner that is strong enough. And just by a show of hands, if I'm not asking you to commit yourself, but how many of you on the live Zoom today would meet these criteria? If you decided to be a cosigner, which I'm not asking you to, how many of you meet this criteria? Because this makes for a really strong cosigner. Can we have cosigners that don't meet all these criteria? Of course, it doesn't take all of this, but this is what we're looking for. So 641 of you now, yes or no? Alexander, Mr. Voloff, do you meet this criteria? Amanda, Charles, Claude, Claude does, I know he does. So the point is, if you do, great. And if not, don't worry. We can bring in a cosigner that does. And we're not trying to sell you something or charge you something. These are people that care about you and your success. When we launch the SPE model, it's really clear. We are guaranteeing, let's go back over here. We are guaranteeing a minimum of a $250,000 capital raise. That's bullet one. We're guaranteeing 250,000 of first month income. And again, if that all doesn't make sense, go back and watch the training videos. And then if you wish to operate, which you don't have to, ongoing income. So it's the real deal. So maybe we can move away from the skepticism or pessimism, but we need to understand. And if you understand what businesses need to have to qualify for funding, they need to have a good, clean entity, and they need to have a loan structure, the package which we provide. And then it comes down to the three C's. This is the key, and you've heard us talk about it. But what we've done is we've given up trying to teach people how to get this on their own and get this on their own and get this on their own. Frankly, it's easier, it's more efficient for us just to provide it. And that's where you've seen us evolve to. Okay, if a client doesn't have collateral, fine, we'll provide it. It's including SPE. Client doesn't have good enough capacity, cash flow to qualify for a large loan, fine, we'll provide it. It's including SPE. Someone doesn't have good enough credit, fine, we'll provide a cosign. So, questions, comments, concerns any of you have? You're probably one of two groups. You're either someone that's looking to solve a problem in terms of getting funding to start or grow a business. So, you're in the right spot. You can come over to spefunding.com, go through the three steps, and we can make it happen. Or you might be someone that's looking to get paid to help others as an affiliate, no cost to do that. Again, what do? You come over here, SPE funding, first two steps, but instead of this, because that's not solving your problem, you come down here, and this is solving your problem, helping you get paid to help others. All right. Well, thanks everyone. We'll be back tomorrow morning, but hopefully now you better understand how we provide business loan cosigners at no cost through the SPE program. See you back tomorrow morning, same time, same place. Thanks. Bye.